You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, why don't we find out together? Yes, it is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. as well as, of course, from the ever-exciting, ever-scintillating network upon which so many of you folks are binging these days. Welcome to all of you newcomers out there, as well as to all of our returning friends. We love you all out there. Remember, if you do like what you hear, do keep rating and reviewing in your platform of choice. It really does help the new folks who are clearly legion discover the content out there. And, of course, speaking of discovering content, if you want to go above and beyond, you want to find out what is lighting things up out there on the pro side, you want to get access to our exclusive pro podcast feed with nearly 200 plus episodes worth of shows for you guys. Great pro Q&As with some of the best minds in the world of options and derivatives. Options oddities, where we break down all the week's worth of unusual activity, as well as, of course, everything else on that feed. Live access to everything else we do here on the network, giveaways, and a whole bunch more. TheOptionsInsider.com/pro is the place to go out there. And let's see who's joining me today on the CME Group and FTSE Russell hot seat. He's getting a little snowed in, but I'm glad he could peek his way through the snowflakes to join us here on the program today. Mr. Dan the Man Gramza from Gramza Capital Management. Mr. Dan, welcome back to TWIFO, sir. How you doing out there? How you holding up in the once-in-a-generation weather event, as they're calling it?
Well, so far, it's not too bad. We have some big flakes coming down, but the worst is yet to come, and we'll see how this shakes out over the next couple days. I'm keeping my fingers crossed that it's not going to be as bad as they're contemplating.
Let's all keep our fingers crossed, and let's get rolling with the show before something knocks Dan offline as we keep on rolling right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we do just that. We break down what is lighting things up to the light side, aka the upside, and to the dark side out there this week. And Dan, it's a pretty evenly split week, all things considered. I'd say slightly biased maybe towards the red. Maybe 60-40, something along those lines. And certainly the biggest dark side mover is our biggest mover, percentage-wise, of the week. But outside of that, it isn't as biased of a week as we have seen in recent months out there. But that's a long way around to saying you are our guest. You decide where we begin our journey this week. Where should we go, Dan? To the light side or to the dark side, sir?
Well, let's start with the light side.
All right, let's keep things light, especially on a day like today. A lot of things selling off today, Dan, so it might be nice to have a little bit of green in our lives. To the light side we go, listeners. Back off to energy first, listeners. Number 5 to the light side, WTI up a little over 2.75%, about 2.77%. It was number 3 in the same direction last week, up 7.33%. Number 4, we're staying in energy. We're going off to RBOB, up 4% exactly. Last week it was number 2 in the same direction, up 8.08%. So it's been an interesting couple of weeks out here for WTI and RBOB, even though we're not done with energy. We'll come back to that. Little spoiler there, listeners. Number 3, we're going back to FX. 2 weeks in a row we've had an FX mover and shaker. That's a very rare occurrence. We've got the yen USD up 4.06%. You know, we kind of played around with some of that fun last week. We were talking about, I believe, the peso as well as the euro USD last week. So fun to see some FX making its way into our movers and shakers again this week. Maybe we'll head out to FX. We shall see. Number 2, we have rough rice in store for us this week, up 7.65%. So a good week for rough rice as opposed to a rough week for rough rice. Try saying that one 5 times fast, listeners. And then our number 1 light side mover this week, back to the ags. It is lean hogs, up 8.54%. It was number 3 in the other direction last week, off 2.8%. So a lot of living just in the light side. We got energy, we got FX, and we've got ags just in the light side. To the dark side we go now. Let's see what we have lighting it up out here. Number 5, a name we haven't seen in a while. This is Eurodollars, off 6.12%. Why haven't we seen this name? Well, it hasn't been moving a ton of late, but also, just from a show perspective, it hasn't really been putting up the numbers. I mean, Eurodollars used to be the big banger, right, listeners? Now coming into showtime here today, we have roughly 400,000 contracts on the tape for Eurodollars. That's not nothing by any means, but certainly compared to the numbers Eurodollars used to put up, it's a pale shadow. Where has all that gone? Well, SOFR has 2.4 million right now. So SOFR is clearly stealing the thunder, as it is intended to do, from Eurodollars out there. So if we do talk rates, maybe we will head out to SOFR instead this week. Number 4, back to the softs. It is lumber, off 6.73%. It was number 1 to the dark side last week, off 5.82%. So actually off more this week, but only number 4. It kind of shows you how the dark side is lining up this week. And again, one of our 3 frequent offenders, Bitcoin, nat gas, and lumber. We've already got one of them here. Going to the dark side, number 4, lumber. Number 3 is palladium. This one's been moving around quite a bit of late, listeners. Off 6.98%. It was number 2 in the same direction last week, off 3.46%. Once again, before you get excited, not a heck of a lot to sink our teeth into out there in palladium from an options perspective. So probably not going to hang out there, even though nice to have the metals popping in to our movers and shakers. Number 2, back to the ags, this time to the dairy, listeners. It is class 3 milk, off 8.33%. And then number 1 with a huge bullet this week, nat gas. They are coming for it, off 19.3%. It was number 4 to the light side last week, up 5.41%. So, Dan, We touched on a lot of complexes there. We got energy. We've got a little smattering of FX. We've got ags. We got a little bit of metals and even some rates. What is lighting up your tape? Where should we begin our journey on the show this week, sir?
I have to tell you, I think we ought to take a peek at Japanese yen.
Oh, I like that. FX. All right, listeners, to FX we go.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, everyone, welcome to the wonderful world of FX. I had to dust off that drop last week just to make sure it still worked. And yes, I was pleased to say that it did. We can talk about FX yet again on the show this week, listeners. You know where to go. Go to that drop down, cmegroup.com/TWIFO, and then go into that asset class selector. We're going to go out past ags, past crypto, past energy, past equities, all the way to FX. Then we're going to go to the FX majors and go almost all the way down to the bottom of the list. And that's where we're going to find the yen USD. How much paper going up in the yen USD right now, listeners? 28, almost 29,000 contracts. So nothing to sneeze at out there in the yen USD. That's a decent clip, certainly for FX. And of that nearly 30,000 contracts, roughly 30% going up in the Jan contract. That has about 15 days to go out there, listeners. So that's where we're going to hang our hat. Before I dive into the numbers a little bit, Dan, here, what is lighting up your tape out there in the land of FX this week?
Well, you know what's interesting, Mark? It's the behavior that we're seeing. Now, if we start with Japanese yen, just 2 days ago, we had a screamer of a day. This market really took off, moved a couple big figures. It showed tremendous volatility. We didn't see it in the other indices. So we were seeing that weaker dollar. But if we look at what it's doing today, that's what I find so interesting about it. Yesterday in the video, I mentioned that I was looking for kind of a quiet day. And so far in Japanese yen, we've seen that. But if we take a look at some of the other currencies, like the euro has really gotten weaker. It's at the lower edge of its range it's had for the last few days. It's around 106.39, 106.40. The Swissy, also a market that's been making an attempt, trying to go higher. Today, it's really backing off quite a bit. The same thing holds true in some of these other markets, like the commodity currencies. The Aussie dollar really got smacked. So did the British pound and the Canadian dollar. We're seeing that U.S. dollar kind of firming up a bit, which I think is reflective of the whole market. When we think about what's going on with the stock market, when we think about the perception that the market has going forward, I think the currencies are somewhat orderly today in terms of its behavior overall as a sector.
Let's see how orderly they are when we drop into our old friend. I haven't talked about him in a while, the yen USD list. Like we said, about 30,000 contracts, close to it on the tape. About 30% coming in this Jan contract. Has 15 days to go. So we're going to hang out there, listeners, if you don't mind. What is the vol? And again, this has always been the knock on FX. One of the reasons it doesn't make it onto the show too often. Not a heck of a lot of vol out there. But this week's starting to percolate a little bit. About 11 1/3 out there in the Jan contract, up about 1 1/4 points. So starting to get some vol, starting to get a little bit of froth cooking out there in the Jan yen USD. Skew-wise, also getting some movement out here. Not a ton, but for FX, it's nothing to sneeze at. 3.7% cheap were the puts last week. This week, 1.9% cheap. Let's go out to the calls now. The calls, 7.8% bid last week, listeners. This week, 5.1%. So the puts getting a little bit less cheap and the calls getting a little bit less bid. Both wings kind of coming in a little bit this week, listeners. In terms of the action, it was, again, by the way, where are we hanging out in the yen USD? 0.007633, if you were wondering. It's a strike that just rolls off the tongue. That means the at-the-money calls, the 0.0077 calls, we're doing the lion's share of the action this week, about 1,200 contracts. The big days yesterday and today, 550 each yesterday and today. The rest kind of scattered throughout the week. Closing yesterday, so maybe we've got some reopening today, or maybe they're taking the rest off today. Either way, it's weirdly similar paper in terms of size yesterday and today. And also, interestingly enough, almost 1,100 of the .0078 calls going up today. So maybe taking half off yesterday, half off today, and then re-rolling up to the .0078 strike. Either way, the paper does line up weirdly similar in that fashion. So kind of strange to see someone leg half of a spread like that, but we've seen weirder things out here on TWIFO, listeners. Outside of that, we got the .00705 puts going up about 600 times as well this week. Again, weirdly similar size. 282 yesterday, all closing. 282 again today. So oddly similar paper going up yesterday and today, both on the .0077 calls and the .00705. That's a heck of a strike. The puts out there. Again, when you're getting into FX weeds out here, listeners, you start to get some funky and intriguing strikes. Also worth noting, if we go out to the Feb contract, the .0074 puts. So again, these are pretty close to the money as well. Again, we're at about a .00763 right now. So the .0074 puts going up nearly 1,000 times this week. About 500 yesterday, 250 today, 200 on Tuesday. Pretty much opening throughout the week. So opening downside put paper going up a little bit farther out here in the term structure as well. And then not to be outdone, we also have June, going out to June. So interesting smattering of paper. It's not all in one expiration month. It's kind of all over the place, which makes it interesting. It looks like we had the .007879 call vertical went up 1,112 times on Tuesday, closing on the 7/8s, opening on the 7/9s out there. So taking the opportunity as we're rallying, looks like, to roll up a little. Actually worth noting as well, it looks like also 1,110 of the .0089s. So it could have actually been a strip opening on the .0089 and .0079 calls and then closing on the .0078. So maybe he rolled it to a vertical. He closed the .0078s and opened a .0079, .0089 call vertical 1,110 times. That could certainly be the case as well. Either way, a lot of paper going up out here in the June contract as well. So again, a little bit of a fun smattering of paper across the board out here in Yen USD. Not a complex, not a product we get a chance to sink our teeth into very often, but a fun one nonetheless. All right, Mr. Dan, you already set us on an interesting course. What's next? What should we hit on next in the fun palooza that is TWIFO, sir?
Well, what do you think we take a look at, how about some energy? Let's take a look at nat gas.
Energy. I think we can make that happen next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, there we go. Welcome to the wonderful world of energy, everybody out there, listeners. Like we mentioned, a lot of energy movers and shakers this week, listeners, to the light side and to the dark side. Number 5, we had WTI up about 2.75%. Number 4, we had RBOB up 4%. And then, of course, our big mover and shaker of the week, nat gas, off 19.3% this week. That compares to last week when it was up 5.4%. So a lot of living to be done out there in nat gas. And Dan, this is usually the portion of the show where I'll tell folks to go on over to cmegroup.com/TWIFO and click on the energy tab and then scroll on down to nat gas to begin our journey this week. And then, unfortunately, I'm going to try to work on this while you're talking, Dan, but it seems like we're having a bit of a hiccup with the TWIFO reports just exclusively for energy for this week. So your WTIs and your nat gases. If you want to go look at last week's numbers, it's all there. You want a refresher on last week's show, everything else is there. For whatever reason, it seems like there's a bit of a hiccup with this week's report. So I'm not going to be able to sink my teeth too deeply into nat gas or to WTI this week, Dan. Luckily, we've got you joining me on the show to help fill in the gaps, Mr. Dan. So let's start with nat gas while I play around with some of this data here, see if we can find some data. What is lighting up your tape in the world of nat gas this week, sir?
Well, I'm surprised. I know nat gas really has come off. It was $7 just a few days ago, actually, and now it's around $5. So a huge move in this market. Overall, for the last few months, though, we've been kind of in this range-bound type market environment, around 740 down to around $5, a little bit under 5. So that sideways move, we've basically have stayed in that parameter, I would say. And a lot of expectations are that it's reflective of the weather conditions we have and the expectation for weather in the United States. You want to remember for nat gas, we use about a third of it to heat our homes. And we use another end to cook our food. The northeast part of the United States, for heating, they use heating oil. It's common there. But the rest of the country, we use nat gas to heat our homes and cook our food. That's about a third. Another third goes towards electricity production. We produce more electricity with nat gas in the United States than coal. And then the third area is industrial. And that also uses about a third of it. And it's in the heavy nat gas consumption industries like the steel industry, chemical industry. Those are big users of nat gas. And we've also have a situation, if we think about it globally, where if you look at Europe, they're paying 5 to 7 times bigger prices than we are here in the United States. Japan is also in the same boat. And we have been exporting nat gas to Europe. And a lot of people said, why didn't we do that before? Well, we didn't have facilities. A few years ago, we really didn't have major export facilities for nat gas. Europe didn't really have a lot of places for us to bring it to. Spain has some of the largest facilities for taking in nat gas. Germany is now just building some. They really didn't have them before. But we are seeing Poland also creating new LNG facilities for importing nat gas. And you would think that would take this up to $12 or $13. It's half of that. It's not what we're expecting to see. Now, there is a Freeport terminal down in Louisiana that's been shut for a while. And that being shut means we're not exporting some of that nat gas, and it's built up our inventories here in the United States. And that's part of the reason why we're seeing this downward pressure here in this market. I kind of feel nat gas is fairly valued, and I expect it to stay in this $2 range now, probably through the first quarter of next year, unless we get something new on the weather front or some kind of new consumption pattern out there. But these levels really do surprise me this time of year to see where we are in this market. But we want to keep in mind, by the way, if prices do continue weaker, and it looks like right now they want to, what you want to pay attention to is around 475. That's where we started finding buyers before. So between 475 and 470, that's where you should see buyers stepping up to lock in prices. The reason they would do that is, one, it's cheap for nat gas, and two, the people who want to consume nat gas, those buyers of nat gas, start putting on hedges, and that's what you look for. So in a candle chart, you look for it to get down toward those levels and leave those lines on the bottom, those shadows on the bottom. So it's an interesting market environment. Again, I think it's fairly valued. These prices do surprise me because we are so low.
All right, Mr. Dan, I've been playing around here trying to get all the data for the folks, and it seems like it is not going to play ball with me. Again, listeners, if you're listening after the fact on the on-demand side, I know many of you are. I'd have to imagine this week's reports will be up and running for you by that time. It's just, of course, as luck would have it, not functioning here. during showtime, but you should be able to go over to cmegroup.com/TWIFO and check out this week's data. See exactly how many contracts are going up. You listen to the show long enough, you know what to look for, where the pockets of activity are, what's going on with the skew, the at-the-money vol, the most active contracts, all of that fun. See if you can play a little bit of the home game for yourself out there in nat gas. And Dan, while they're doing that out there in nat gas, what is catching your eye out there in the other big dog in the energy complex, which is WTI, sir?
Well, that one is another interesting marketplace. A lot of people said it should be over $100 a barrel when you look at the global picture. And I don't agree with that outlook. This is another market that I feel right now we're fairly valued. In other words, is crude oil real cheap? Well, not real cheap. It's not $50 a barrel. Is it real expensive? No, it's not above $90 a barrel. That's when you start getting expensive. And I think right now between that $84 level, the $70 level on the downside, it's fair value. And what we're seeing here over the last few weeks is that we basically have been in a sideways market between those levels. When we get up to 82, you start seeing those shadows on the highs on a candle chart, which imply, from my point of view, what I call behavioral Japanese candles. It implies sellers at those higher levels. And around $70 that we saw about a week ago, we saw those same things on the lows. We saw those shadows on the bottom, which means they're buying the break. That implies hedging to me. When you look at a commodity market and you see a market that stays in that range-bound type environment, that's usually because of hedging. Hedgers either trying to lock in a higher price if they're a seller or trying to lock in that lower price if they're a buyer, a consumer of this product. And when we look at the global picture, even though, OPEC said we're going to cut back that 2 million barrels a day, but let's put that in perspective. Where does that fit in? If you look at the global picture for crude oil, the world consumes about 100 million barrels a day. The United States consumes between 20 and 25 million, closer to 20 million barrels a day. So we consume about 20% of global production. Imagine a big barrel of oil that has all this oil in it. So we are the largest consumer. And then other countries, they take what they need as well. But when we look at that in the United States, if we go back to our situation, first, let's finish the global. If we're talking about 2 million barrels, you're talking about 2% of supply being taken out of the global production. And we really haven't seen the market have a tremendous adjustment because of that. Saudi Arabia, if you look at the members of OPEC, they really do want to see crude oil around $90 a barrel. They can balance their budgets. It's a friendly price for them. What we also see with crude oil on the global front is a shift in supply. Russia basically has been kind of somewhat cut off from Europe at this point. Well, then crude oil production, that's a big deal to their budget and where they're going, and they're increasing that customer base is India and China. The other big deal about that, if you're India and somebody said to you, look, I'll sell you crude oil at a $30 discount. Well, you got to think about your economy, what you're trying to do for your citizens. It's very difficult not to take some of that crude oil at a very reasonable price. The other thing with China, just like Russia, they want to get away from that doggone U.S. dollar. When you have transactions in dollars, the United States, because of the money transfer system that's used globally, can touch that money. And we've seen the United States do that. So they don't really want to use U.S. dollars, and crude oil is priced in U.S. dollars. That is the mechanism that's used globally. Well, China's willing to pay in a different currency. They're willing to pay in rubles or yuan. And Russia is happy to take not only rubles, but another currency. Remember, Russia turned around and said to Europe, here's the deal. You got to pay us in rubles now. Forget this U.S. dollar. And that's easy to say. Remember Putin said that. Okay, you got 2 days. You got to pay in rubles. The reality is those are all contracts that are out there. So if you're going to change the terms and conditions of the contract, which you would do if you did change to rubles, then the contract can get renegotiated. And that's not going to happen overnight. Now, there are some countries that did open bank accounts in rubles. They would pay in dollars into bank accounts that would be transferred into rubles, and that would be paid to Russia. The status of some of those accounts, I'm not so sure about now. So the flow globally, though, the point is the flow to India, to China, and to some other countries, that big barrel of oil I was talking about, it's still there. So I think that's one of the reasons why we're seeing what we're seeing here in crude oil, this range-bound market. So I look for that to continue at least through the first quarter of next year. Again, unless we see something unusual, right now I think it is fairly priced. So a sideways move, a range-bound market, let's say between 85 on the upside, 70 on the downside would be expected. Now, that doesn't mean you and I don't have opportunity in here. The options could be a great way to play some of this movement. If you get a bullish setup and even put something simple on like calls. I will say this to you from my point of view. If you look at a crude chart and I look at things technically. I use these behavioral Japanese candles, but whatever signal you're using, what you look for in crude, if you now have a signal to buy or to sell, technically, if that trade is not working in the next 5 days, it probably won't. And my feeling would be to take that position, cash it in, and use that money someplace else. I also buy at the money. I want delta near 100. So deep in the money call or 2 at the monies, I want that near 100 because if it's going to work for us, I want to get paid. So I want that delta up there. Also, if you're looking at a daily chart, I would buy expiration beyond the current expiration. And even though that costs money to buy that time, it'll also allow you to let the position work, if it does, without having to deal with theta. So that's kind of how I look at the crude oil market right now.
All right, listeners, and we'll have to keep on rolling into our next segment. It is time to peer into equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful world of equities, a very topsy-turvy world. Of course, we saw recently Powell come out and really kind of give a gut blow to the market. We saw a lot of sell-offs last week. Coming into this week, the question was, would the sell-offs continue? And mostly the answer was yes. It seemed like maybe yesterday, on the heels of some decent earnings out of some names like Nike and a few others, people were kind of grasping at straws. Mostly the bulls, it seemed like, but they managed to rally things a bit, mostly around 1 to 1.5% in the major equity indices. And then coming into today's show, once again, we are exploring new lows. Most of the major equity indices off north of 2% on the day. The NASDAQ was off over 3.5% at one point. So a lot of red on the screen for the equities today. Interestingly enough, you might think as a result there would be a lot of green on the vol screen because we always set the table from a vol perspective before we dive into equities every week, listeners. And yet, for a lot of this morning, the answer to that was no. We are starting to see vol start to catch up now a little bit with what's going on out there in the markets, but even then, not much. Let me set the table for you, listeners. You'll see what I'm talking about. RVX, so the VIX of the Russell 2000, coming into showtime, not even 27.5, about 27.40. That puts it up about 1.1 points on the week. VIX cash just a little bit shy of 24, 23.90. That puts it up about a third of a point on the week. So again, VIX cash was much lower. It was down in a 21 handle earlier this morning. So we started to see just in the last couple of hours that vol start to percolate back in there, maybe to a level where you would have assumed we were, given all the rest of the action going on out there in the markets. Vol itself, so the VVIX at about an 87. That's still down about 6 points, but it's much higher than it was just this morning. That was down about an 81 coming into the start of the session today. So vol was starting to get a little too low for everything else that's been going on out there, and now starting to catch up as well. Vol Q, so the at-the-money vol of the NASDAQ out there at about a 28.25. That's up about 1 3/4 points from where it was this time last week. That puts the VIX to RVX, that large cap to small cap vol spread, listeners, at about 3.5 points. That's about roughly 0.8 of a point wider than it was this time last week. And VIX to vol Q, so the NASDAQ to S&P vol spread, at about 4 1/3. That's about 1.4 points wider than we saw this time last week. Dan, a lot of table setting out there because there's a lot of interesting stuff going on in the world of equities, including yet another gut punch to the market out there today. What are your thoughts on all this madness unfolding once again in the topsy-turvy world of equities, sir?
Well, I have to say this, Mark. I was not looking for what we see today. That was not my expectation.
I don't know if anyone was. It does seem like once we got the second leg of the sell-off this morning, people were starting to panic a little bit. They were not expecting the 2 3/4% in the S&P, 3.5% in the NASDAQ. I think that took a lot of people by surprise, not just you, Dan.
Well, thank you. I'm glad to hear that. But I think what's interesting about it is that we're in that environment where good news is bad news. So good economic news is bad news if you're looking to the future. And that's one of the things, as you know, the stock market has a tendency to do. It's an anticipatory market is the way I think about it. So what is it doing? It's thinking about the Fed. What is the Fed going to do? And we saw that, things were slowing down. We saw a real estate market, existing home sales, permits, and all the parameters, housing starts, the things that we look were a little bit softer. Okay, so that's cooling off a bit. And the Fed only increased the interest rates, 50 basis points, so they're trying to be accommodative in that regard. So, but they did say, we're serious, and we're going to get this inflation down. So we know they're headstrong in terms of following the course. And then we started getting some information today. The U.S. economy is increasing better than expected. The GDP was revised from 2.9% to up 3.2% for the last report. And the job claims report that increased by 2,000 to 216,000, still less than expected. So the job market is healthy. And those parameters that the Fed looks at, well, they haven't softened. So that means that the Fed probably really is going to have the reasons to increase interest rates because of those parameters, because the healthiness of our marketplace, our economic situation allows them justification to continue increasing interest rates. What's fascinating about that is nobody knows the magic number. I mean, if you and I look back, remember, Mark, in the late 90s, we had or early 2000s, we had the dot-com bubble. Well, the interest rate there was 6.5%. That was the magic number that the Fed increased interest rates to that caused credit to choke off and the dot-com bubble to burst. And then in 2007, we had the Fed again increasing interest rates. And the reason they do is because of this inflation issue. That is one of their jobs. Full employment, interest, inflation, and price stability. That's their job. And so they're increasing it to 5.5%. At 5.5%, those subprime mortgages collapse. People who could barely make it at some interest rate, they're not going to be able to make that payment. And that's what happened. So then it was 5.5%. Gosh, we're approaching the possibility of being at 5%. Is that the issue? If we get above 5%, we could really be in a recession, because that is what the market's afraid of, right? We don't want to see that. The Fed doesn't either. But nobody knows what the interest rate should be. We don't know, neither does the Fed, what interest rate will tip us over, will cause that dramatic shock to our economy. And so the stock market, as we look at it, it's really sensitive to this possibility. And that's what it's looking at. Has the Fed done something today? No. Could they do something in the future? Yeah. And that's what I think we're seeing in the stock market today. We're seeing the anticipation of the possibility that the Fed indeed will continue with their program, and it may tip us into recession. Some people feel we're kind of in that now, and other people feel, well, we had the first 2 quarters this year that were negative, therefore a recession. But this last quarter and maybe the third quarter we see was better than expected. So that fear is still out there, and I think that's what we're seeing in the stock market today. Now, the other thing that's hanging out there and that people are looking for is that Santa Claus rally. So do we get that in the equity market? And actually, if you look at the typical definition of that, it's the last 5 trading days of the year and the first 2 trading days of the new year. So that means we go from tomorrow, December 23rd, to January 4th. That's where we look for that market to increase. Well, if we have some confidence coming back in, then maybe we could see that kind of movement. And plus, we have some references here, I think, in the stock market. If we start with the S&P, where you and I have seen buyers coming into the market before. Even right now, we're a little bouncy on these lows. So it implies that are people willing to go home short? Well, maybe not if we get a decent rally going here. Are people willing to go into a holiday period short? We're going to find that out in the next couple days. And we also know at levels like for the S&P, around 3750 to 55, we found buyers there before. And below that, the next level we look at is that 3,700. In the NASDAQ, you mentioned that one, Mark, falling out of bed. That's really the weakest out of all these indices. The next major reference we have to the downside there is 10,008.25 to 8 even. That would be a level where the possibility of buyers may come back in on that market. In the Dow, what's interesting about that market, it's basically at its swing low right now, and it's bouncy like we saw in the S&P. And that's around 32,800. Below that, the next level you and I would want to pay attention to is 32,450. That would be the next level in that market where we could get a pretty good bounce. If we look at our friend Mr. Russell, those small to mid-cap stocks, they're also bouncy at the lows. So the S&P, the Dow, we're seeing that kind of movement as we're finishing up here today, that bounce off the lows. And the lows there we're looking at is 1730, 1720, that range. The next major one, would be 1,700 in that market. So if we move lower, how we move lower, I think it's going to be important for us to pay some attention to. And in these indices, right now, we're seeing a market reacting to something. But it's something that hasn't occurred yet. So for tomorrow, if we finish like we are right now in these indices, I'd look for more of an inside type day. I wouldn't look for it to fall out of bed again unless we have some kind of new fuel to create that. So without that, I'm looking for an inside day tomorrow in these indices.
Yeah, interesting action out there today. Like you mentioned, we are kind of bouncing off the lows. S&P is off a little bit less than 2% now on the day, so after getting down somewhere around 2.75% earlier today. So maybe a little bit of a rebound heading into the close out here. We'll see if this can have legs or if we're going to turn right back to the dark side again. Let's go out to the S&P, the E-mini S&P. Haven't hung out there in a little bit. Coming into the start of this segment, back up north of 3,800. We were in the 3,700 range for a lot of the session listeners. Back up over 3,800, 3,809 when we kicked off the segment. It still puts it down about 1.8% or about 70 handles just since Monday's session. How much paper going up out there in the E-mini this week? Perhaps not as much as you might think. Certainly it's a decent amount, about 2.24 million contracts right now. But given how much whipsaw action we saw even today, we might be forgiven for expecting a little bit more. Of course, then again, we are heading into a holiday period, so maybe some folks were, as Dan mentioned earlier, caught a little bit off guard with today's price action. They were planning to wind things down already. Maybe a lot of them already got the heck out of Dodge, so market's starting to get a little bit light, a little bit thin already. And then, of course, we have today's extreme move to the downside and now a bit of a bounce here. So intriguing stuff, as is usual with an equity. All the action is found in the contract that pretty much goes away tomorrow. We've got 27.5% of the paper going up out there in that contract. Normally, I would say let's ignore that. But then again, if you're talking about an equity, listeners, and you're ignoring that very near-dated paper, you're really missing the entirety of the conversation. I mean, how much have we been talking now about the zero DTE phenomenon in products like SPX, and the E-mini is not immune to that either. A lot of very near-dated paper. Usually, it's the paper we laugh about, the selling far, far out of the money puts with a couple of days to go, so picking up literal nickels ahead of the steamroller out there. Some of that this week, but we're not going to focus on that. Instead, interestingly enough, the most active contract this week in the E-mini are the 3,900 calls going out tomorrow. That caught my eye because we don't see a lot of very near-dated upside paper dominating the tape too often. Again, that's about 100 handles out of the money right now. They went up 41,227 times, listeners. So I did a little digging. You guys can do that yourselves over there, cmegroup.com/TWIFO. Click into the equities section, listeners, to get the ball rolling there. You'll see it looks like a bit of a sizable vertical going up today that drove a lot of that paper. The 3,900s themselves were pretty active all week long. Again, a total of nearly 42,000 contracts on the week. But right behind it, we have 28,000 of the 3,895 calls, including 27,400 going up today. So pretty much almost all of that going up today. So it looks like we have a bit of a 3,895, 3,900 call vertical going up today that goes out tomorrow. So very near dated. If they're buying that, listeners, they need a very nice pop, about 100 handles in the S&P pretty quickly to make that thing happen. If they sold it, I'd be curious to see exactly how much premium they got for that $5 spread. Either way, it's a very tight vertical as well, which is also fascinating. Both strikes, not a ton of OI coming into today, 2,300 on the 3,900s and less than 1,000 on the 3,895. So it's not a roll. It is clearly all opening paper out there. And then, lest it be forgotten, we also had some of that funky put paper out there, including 28,000 of the 3,400 puts going up. Most of that on Tuesday, about 22,000 going up on Tuesday. So folks are still picking up the old nickels in front of the steamroller. It's just not all of that, listeners. There's actually some interesting paper, including 3,800 puts going up pretty actively this week. Those are right now, as we speak, the at-the-money puts. They were in the money earlier today, and not surprising, we're seeing a lot of that paper going up mostly today. Almost half of that paper going up today. We said almost 24,000 contracts on the tape. A little over 12,000 have gone up so far just today, 12,300. So as we're whipping around this 3,800 strike, blowing through it, then blowing back again to the upside, we're seeing a lot of 3,800 puts going up. which again makes sense, and it's kind of nice to see that kind of paper going up as opposed to the 3,100 and 3,400 puts, which we're also trading for size this week. Let's go a little bit farther out to see if we see any other interesting and or aberrant paper out here in the funky world that is the E-mini. 3,800 puts going out next week, end of year, the 30th. Also pretty active this week. 22,000 of those going up this week. Those were active again all week long as well. Today about 8,600, 5,300 yesterday, 4,700 on Tuesday, 3,300 on Monday. Back and forth opening to closing pretty much all week long, which again is what you would expect. That's a pretty important psychological level, 3,800. And as we whip around it, we're going to see that paper continue to light up. Let's go a little bit farther out to see if we see anything else where Jan 3550 puts, also pretty active this week, doing about 6,200 contracts. The big days, Monday and Tuesday, 2,200 on Monday, 3,800 on Tuesday. Opening both days, so some folks coming in and opening for size, decent size at least, out here in the 35 half puts. Intriguing stuff. Those, again, a little bit farther to go. And again, not the amount of size we're used to seeing in those kind of strikes, but intriguing stuff nonetheless. Now let's go a little bit farther out because folks are going all the way out to February, listeners. And they're still playing in those puts. This time it's the 3,200 puts in February. Have done 24,500 contracts this week. The big days, Tuesday and Wednesday, 10,000 on Tuesday, 12,000 on Wednesday, both opening. Are they going all the way out to February to write puts? Maybe. Certainly possible. We've seen crazier things. It's just that these kind of strikes have mostly been popular in very, very near-dated contracts. February, I mean, this position has some actual time on it, which is unusual for these trades. Got 57 days to go. That is an eternity in the equities, listeners. Not used to seeing people going that far out. Also, 3,300 puts going up in March, about 10,300 times this week. So there are a lot of puts going up this week, as to be expected. But it's not all in the very, very near-dated paper. Speaking of near-dated, really quickly, Dan, I kind of want to pick your brain on this because we have seen this just transformative flow of paper into products like the SPX with these 0 DTE, these 0 days to expiration contracts, kind of transforming the way the product is traded now. I'm curious, what are your thoughts on this 0 DTE explosion that we're seeing in the equities, and have you sunk your teeth into that yet?
Well, I have to tell you, no, I haven't traded them. But what I think is interesting is that maybe it reflects the idea of, instant gratification in a sense. We're used to things happening now when we do something, especially on the computer or if there's a game or whatever people are looking at. They want feedback and they want it now, and they're willing to take that type of risk, I guess. They're with that expectation. And maybe those products kind of fit into that. You know, we've seen event contracts launched by the CME group, you know, which allows someone to say, I think the S&P will close higher than this level, yes or no. So a very simple decision process. And, you know, maybe those options on those products, which I find really interesting, reflect our expectation of immediacy. I mean, what do you think, Mark? Do you think that's what's going on there? Or do you think, because the interest in that is fascinating to me.
Yeah, it fascinates me as well. You know, I never expected, I don't think anyone expected, kind of like today's sell-off, but writ large, and that no one expected the just surge of volume to go up, because we had effectively dailies in the SPX for a while. We had not every day of the week, but most of them. So that kind of trading was available if you wanted it. But it seems like the adding of the other two, Dan, whatever it was, that was the missing piece of the puzzle. Now, folks, it's like a light bulb went off. And all of a sudden, wait a minute, I can do this every day of the week. And they are. And it's for size. It's incredible size. And it's a lot of retail, which if you had told me we see a lot of retail playing in SPX, that would have been my first big surprise. And then B, it's also funds playing in very near dated paper, which is also surprising. So, yeah, it's transformative. I haven't really come to grips with it fully myself yet, Dan. That's kind of why I wanted to get your thoughts on it, because it is still very much a fluid situation. I don't think we've seen all the other after effects that are going to come from this. We know when we had a big shift a few years back from monthlies into the weeklies, that changed some of the dynamics of the options market going forward. Monthlies didn't perform the same way when all their volume was being cannibalized by the weeklies. And now we might see something similar with the traditional weekly versus the dailies. And who knows? There's a lot of analysis to be done still yet on how all this is going to shake out. So I'm still in the early days of it myself, Dan. I think it's a fascinating evolution. And it's maybe this is the way people are coming to grips with these indices now that are still pretty pricey even after these sell-offs. This is a very short, very near-dated, very cheap swing at the fences, or maybe a cheap hedge, whatever the case is out there, that allows them to have a little bit more ability to come to grips with these indexes in a little bit more manageable way. Either way, more volume is a great thing. I'm happy to see it. It's just fascinating the way things have changed out there. All right, listeners, that is going to do it for TWIFO out there today. What are your thoughts on these very near-dated equity contract, listeners? It's very much changing the game in the equities, and we're starting to see that spill over into products like the E-mini and others out there. So it's not long before everything out there is just zero DTE all the time, listeners. So brace yourselves for that, perhaps coming in the new year. And before we go, Dan, what's coming over there in the land of dangramza.com that they might want to check out?
Oh, well, I take a look at 22 different futures markets. It's futures market focused. These are daily charts. And I use candle charts. I use the approach that we were talking about, what I call behavioral candles. And so it looks at the buying and selling dynamics that create a market, like we were talking about earlier. It reminds me, I think, of what you would see on the floor of an exchange. If you could watch the broker's hands and you could see them either all selling or all buying, or they were showing size, I think it's also reflected in a chart. And that's what I noticed on the board of trade floor looking at the bond pit. And so that's the underlying theme that I look at. There are red and green lines on these charts that represent buy and sell levels. Green, buy; red, sell. These are not buy and sell recommendations, but I do try to show how I would look at these markets. And there's a free video that someone can look at. If you've never traded futures, a place to begin is just watch them. And that could be one way to look at that. Or if you only trade, let's say, currencies, but you want to look at the equity markets or interest rates or metals or energy, agricultural markets, those are all covered. And you may find something else that you find interesting. And so that's the intent behind it. And it's been interesting times. It's done every time the market is open, there's a video. And you can also go back, I don't know how many years it is, 7 or 8 years, to look at previous videos. If you want to say, all right, what was he saying when this happened? So you go back to that date, click on it, and you can see what was being recorded on that date. So those are some of the things happening at that site.
There you go. Check them out. Dan Gramza, Gramza.com. A new video every day, at least when the markets are open over there. So check them out over there. A lot of great content. Of course, you know where to go to check out these reports when they're usually firing on all cylinders. CMEgroup.com/TWIFO is the place to go to begin that journey. And last but certainly not least, you know where to go to learn more about all things small cap. FTSERussell.com is the place to go for more info. If you want more info in your lives, we're back again tomorrow. Even though I'm technically on vacation, we're here for you folks. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. Then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.